What is going on, guys? I'm gonna make a quick video. Been getting so many messages on what the hell is order flow, why I use it, and how can someone access it. So in this quick video, I'm gonna break down briefly what is order flow, how you can access it, or how I access it, and why it's very, very important. So number one, how to access it. So you have to invest in yourself, guys. It's the biggest thing I want to tell you right now, that when it comes to your excelling in any venture, whether it's baseball, basketball, football, business, trading, as we're talking right now, you got to invest in yourself. So where I basically get my order flow data from is from TradingView. Now you can pay the annually, which is about $800 Canadian for the whole year. You get the most important one, which is order flow right over here. Or you can do what I do. You can also pay monthly. I've done that before. I've swapped from back and forth. So you literally can go wherever you want, but you need the premium version. For US and like European people, it's like 80 to 75 bucks. Obviously, us in Canada here, we take the whip, we take the hit. It's about 95 bucks, but it's really worth it. And I'll explain to you guys right now very briefly. I made this really quick PowerPoint. My intention is not to go in depth with it like I'm some sort of professor. I want to show you examples from my chart. So the most important thing why I like to use order flow, and I recommend everybody to use it no matter what strategy you use. Make your strategy, of course, but have this as one of your core foundations. It's basically, you guys can see real-time data. That's the biggest problem that a lot of people have, that I've seen, that I've worked with one-on-one, that don't have, I guess, success trading, is that they're just trading based on price action. Now, price action is great. I know a lot of people that make a lot of money on price action. However, with order flow, you're able to see basically what's going on specifically in every single candle. You get to see the aggression, you get to see the absorption, you get to see passive sellers, and most importantly, you get to see and identify when big players are exiting and entering the market. It basically allows you to trade with smart money. Because somebody can be on the charts, for example, let me pull this out here, and they can be like, oh, there is liquidity up here that needs to get swept for us to go lower. This is going to get swept because it happened here, and it happened here, and it happened here. Because now, in a nutshell, essentially, you're just almost guessing. You don't have any hard data on why you believe there's liquidity up here. But I know there could be liquidity up here because of a low volume node or a high volume node, et cetera, et cetera. But going back to the PowerPoint, like I mentioned, it's going to show you where aggressive buyers and sellers are, and absorption is, and of course, passive sellers. And I'm going to show you some examples right now so you can kind of see what I'm talking about. But more importantly, why traditional charts aren't enough is because, number one, lagging indicators. If you know somebody that's simply relying on indicators, it's kind of double-bladed sword, because most indicators lag, and which means you're going to have late entries. Candlesticks show price but never intention, meaning that, think of it like, trying to put it in perspective, think of two guys grappling. You just saw one guy get rammed to the floor. You don't see the strength behind him. Order flow allows you to physically see, like an x-ray, the gentleman's strength compared to the other guy's strength. And then you're able to see something called an imbalance in strength, where one is going to just absolutely, run the other guy over. And of course, you're not able to see missing, hidden, and buying pressure. So let's get right kind of into it and break down everything. So number one, when it comes to order flow, this thing right here is called the volume profile chart. The volume profile chart is going to show me where the most action is done at every key level. So if you guys notice on my specific chart, I have little black lines. Those black lines are my supply and demand zones, or my personal point of control, where I like to take my moves off a solid breakout or a retest back to the upside. So whenever we see something like this, something like this, something like this, notice where we're at, right? Let me pull my camera a bit down. Notice where we're at. Look at this. Now I want you guys to understand why I like order flow. Look at this. That's a little bit too early. We'll go up here. Like, look at this. Even look at this. So if you guys notice, All the things that I just circled are called volume nodes, high volume nodes, because the more they stick out, that means the more business is being conducted, the more transactions are happening at this specific area. Cough, cough, smart money is getting in. Now, the reason for this is because there's like 10 major market makers that move like 90% of the market. And if you're solely relying on price action, which is not an issue, I know a lot of people that make a lot of money with price action. So I'm not shitting on it because I use it as well. But if you combine order flow with price action, it's going to make your overall, not only your R multiple greater, but you're also P&L greater, because you're able to risk very less to not to not to not uh to not lose a lot. Like, for example, this trade is almost a 30R multiple, which is a great risk to reward. I'm risking about 3.5 points to make 10 points. And I was able to capture a really good position. I'm going to explain to you why I took that position. But ultimately speaking, this shows me when we have aggressive buyers coming into the market, it allows me to see where smart money is getting in. This is called the volume profile. And whenever we're in somewhere here, we have a lot of low volume. Hence why you guys see right here, we chop a bit, because this right here is a low volume node right here. This is low volume activity right over here. And we retested it. And then we obviously went back up. But this right here is a high volume node. Identically, it's lined up with the point of control where most of the moves happen either to the upside or to the downside. So when you combine order flow with price action, it's a recipe for ultra success, and it helps you see the markets a lot better. So this is order flow in a nutshell. I don't want to confuse you too much on this call or on this video. I'll go more in depth a little later on what it specifically all is, but just know a lot of activity is happening here. And you'll want to remember this: when we're at the value area high and the value area low and the point of control, over 70% of the moves happen in this area. So if you notice, if I do this, you guys can see that most of the moves happen in this area. Hence why this trade was caught here. You could have even caught another trade right here if you really wanted to. This would have been a secondary best entry right off this break of market structure, this BMS right over here. So notice that over 70% of transactions, over 70% of the buying opportunities come between the volume profile high, the value area high and the value area low, and of course the point of control. Now let's get back into the footprint chart. So the order flow is going to show us volume happening within the candlestick. Now what I do is I split my screen, but for this instance, I'm not going to split my screen. This right here is going to show us when or what's happening basically in between every single candle. Now, I know this is going to look very confusing for the average person, but just understand that this all tells a story. So basically here, guys, this is going to show us all the buyers in this position, in this column right here, and all the sellers. This is very, very important data because, again, the more darker these greens are or darker these reds are, it's going to show me, like I mentioned here, where we have aggressive buyers in this market or passive buyers or passive sellers. And of course, more importantly, absorption, where we're able to catch beautiful bounce plays off the market. So, for instance, the biggest problem with price action is that you're not able to see what is happening and why a move is going to happen. So, for instance, right here, we have something called delta divergence. Now, I'm going to explain to you guys what that is. And in the next video, I'm going to break down order flow maybe a little bit longer. Maybe do like an order flow boot camp. But you guys can see that there's a number at the bottom. So the number at the bottom is going to show us how many orders are basically being booked in, or how many orders or how many contracts are executed, but how many of them are favoring either buyers or sellers. So for instance, here we had 100.61 million contracts being executed in favor of buyers. In this one, we had negative 1.95 million contracts executed in favor to sellers. However, this is something called a delta divergence, meaning whenever I'm looking at the delta footprint chart, I have some confluences. One of my confluences is when I see a discrepancy, meaning that I see an absorption candle or a stacked imbalance or a imbalance that's basically favoring buyers or favoring sellers. So right here, we have a delta divergence. Now, again, what is that? It means that we had a negative delta, but we ended off closing with a positive candle. And if you understand price action and you understand candlesticks, you're able to coordinate this candlestick and what is happening. And this is a beautiful bounce play. But again, not a lot of people have that skill to be able to look at a candle and be like, oh yeah, that's a doji, or that's a hammer, or that's a reverse hammer, or that's a, I just mentioned doji. So not a lot of people have the knowledge to do that. So order flow is going to show you, or the footprint chart is going to show you where we have something called a delta divergence. So a delta divergence, like I mentioned, negative candle or negative delta, but a positive candle. Now, why? We had aggressive buyers coming into play. So they were absorbing all of this selling pressure. And we bounce off this because aggressive buyer, aggressive buyer, aggressive buyer, aggressive buyer, multiple aggressive buyers here that had us go up. This was showing me that buyers were defending this area right here. And if you notice from this specific area here where it says divergence, we had the move happen. This is how I was able to capitalize my position. Now, did it happen right away? Obviously not. We had to wait from 9:35 to about 10:40, an hour. I held this position for an hour fully until it reached these highs here. And then we consolidated a bit, and then guess what? We kept going higher. But because I was able to identify this delta divergence here, I was able to execute my position, place my stop losses below the previous low right over here, and I never got I never got waked out ever. But some of my my peers that don't use order flow, that don't use a footprint chart, they didn't see that we had aggressive buyers here. Oh, sorry, a delta divergence here that was absorbing all the sellers. They thought we were going to go for sells, and guess what? When we came back down here and they're like, oh yeah, we're going for sells. Guess what? They got completely faked out and went all the way up to the upside. Like going back to this candle, going back to price action here. Think about how many people took a sell here. Think about how many people saw these candles happening and they're like, oh, yo, I'm going to get in for a sell. Almost a bullish, almost an engulfing candle here. Yeah, let me get in for a sell. And then guess what? You get faked out. But I knew this candle was an absorption candle, and it absorbed all of this selling pressure. And guess what? It went all the way back up, and we were able to basically close a little over 10 points in profit in this position. So the delta footprint chart, guys, is going to show me when we have look, if we had a regular candle, you wouldn't be able to tell, because if you see the average, trader, will see something like this. They'll be like, oh, we're going down. We have a bullish trend forming up here. We had a bounce, retest at these highs. We're going to go down for sells and test probably previous New York's lows the previous day, which is going to be, what number is this? It's going to be 63.63. Let me go in for a quick sell right here, catch a quick 13-point drop. And guess what? Kaboom! Market goes up to the upside. Why? Because most people don't have order flow and they didn't realize that, guess what? Price absorbed and we shot right back up. So, even breaking down one of my journals here, because again, I'm a very, very analytical guy. I like showing journals. I like all that good jazz. I think it's really key to have a solid journal to your position. But for example, if you notice this one, how I was able to capitalize my good position is because guess what? I saw delta divergence. I saw that there was aggressive orders being conducted here, business being conducted, a lot of orders happening here, which allowed me to take my entry here. And I didn't get scared. I actually got in right here. right when we observed all the buyers here, like when we moved up here, the value area high, I took it. But even though we went up, when we went down, we were holding this level, and I knew if we didn't break these lows here, we weren't going to go down. And I was risking 3.5 points amongst three different positions, so I was risking a little under 9 points to gain over 30 points. It's a beautiful R multiple, literally almost a four, almost a three or no, almost a 4R on my trade, which is super remarkable. And guess what, guys? I was able to capitalize this position because I had order flow. I'll show you another example because again, it's always super important, guys, to have your um to have your um your journals written down. But again, this is why I like order flow, because it allows me to see what is going on within the candle. This is my other trading journal. Let's look at this one, for instance. Let me make this a little bit bigger. I'm going to zoom in to 300 and pull this up here. You guys can see here, again, delta divergence, I believe it was. Oh, no, this was different. Let's see, did I put it here? No, so this was a stacked imbalance. So again, this is why I like using order flow. Let me zoom in a little bit more so you guys can see what a stacked imbalance is. So a stacked imbalance is basically, or an imbalance is basically when we have over 300% buyers greater than the one diagonal from us. So I know you guys can't see it too much from the blurry screenshot, but this order right over here was 300% bigger than this one. So think of this like a seesaw. Think of this like, I knew a breakout was going to happen because of this. Think of two guys grappling, and you just see one guy throw the other guy down and manhandle him, but you don't see why it happened. And someone like me that has an order flow, or anyone that trades order flow, they're able to see inside the guy and inside the other guy that, the one has a huge amount of strength compared to the other, which we have a discrepancy, also known as an imbalance or a stacked imbalance, where we have aggressive buyers more stronger than the sellers coming in. We had it here, market shoots up. Then we come here, more aggressive buyers here, passive sellers here, we shoot up. Again, more aggressive buyers here, we create an imbalance here. We have little to no sellers here. We shoot up. We come here. We come here a bit. We're still at a positive delta with a 1.99 million contracts, 2.37 million contracts, 1.72 million contracts, all favoring buyers. Then we have this candle, another imbalance here. We have over 300% more buyers than sellers, aggressive buyers. You guys can see the dark color here. The weak passive, even though this is dark red, it's still 300% shorter or 300% less than this. So it's not aggressive buyer or not aggressive sellers. And then boom, we create an imbalance on price action. And then we have a stacked imbalance here, which was a cherry on top for me, where we had aggressive buyer here, passive seller, aggressive buyer here, passive seller, aggressive buyer here, passive seller. All of these orders here were 300% greater than the orders on this side, which allowed price to absolutely rip and me to catch this beautiful trade, which ended up scoring me a little over, I think it was almost 20 points in profit. I got in at 62, 63. So it was like 15 points in the market. So that's the whole point of order flow, guys. As you guys can see here, the most important thing is we're able to see what's happening within every single candle, because you guys can't see that, and it allows you to see when smart money is getting in. Of course, traditional charts aren't enough because we have lagging indicators, which gives us late entries. We have candlesticks, which show us price but no intention, which most of the time you have a bad entry, a bad R multiple. Now you have to stretch your stop loss or extend your take profit. And now you're in a situation where you need to stay longer in your position. And you don't know, maybe we're having sellers absorb all the buyers at the higher high. And now we're in a reversal. And now your winner turns to either break even or even worse, a loss. And then of course, you can't see missing hidden buying and selling pressure. And again, why order flow? It gives you real-time analysis of buying and selling activity. You use tools like the volume profile, the footprint chart, And again, it goes beyond traditional candlesticks. So hopefully, guys, this video brought you some value on why I use order flow, how you guys can access it, and breaking it down briefly to an extent. I will be making more videos because I'm getting a lot of requests on how to use order flow, what it is, how I apply it to my strategy. I'm a simple price action order flow trader. I look for break and retest, break and closes from my specific supply and demand zones, and I basically map the, or I connect them with what the volume profile chart show me within my personal supply and demand zones or support and resistance zones. I look at the delta footprint chart. What is every candle doing at my specific supply and demand zone? So hopefully this brought you guys some value. You guys are able to basically use this for your strategy. Again, order flow works with anything, whether you do smart money, whether you do supply and demand, whether you do support and resistance. It works with every strategy. The whole point is not to throw your strategy out the window. The whole point is to grab what you use and add order flow to it to 10x your PNL. So hopefully, guys, this brought you some value. Make sure you like, comment, and subscribe. Share with a friend, and add order flow to your strategy because you will see an increase to your trading PNL. And don't forget to buy some crypto. God bless you guys.